Hey everyone, and thanks for jumping back into the Teslaverse. Today we're going to talk about Tesla, so if you guys like the content, please subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. Let's go ahead and jump in. So the first chart we've spoken about many times. It just shows the valuation of Tesla, so the price on the primary y-axis on a logarithmic scale versus time with a color-coded risk metric, right? So this risk metric just is meant to help identify periods of great accumulation, these bluer regions, and then periods of short-term bubbles. One of the nice things about Tesla, of course, is that it doesn't tend to drop 80% like a lot of cryptocurrencies do after they go up 10x. But in fact, you can see that sometimes it more or less moves sideways for a while. And it can trend downwards, of course, but it doesn't necessarily have those, manic drops where it drops like 80% in a couple weeks, okay? So one of the things we talked about before, right, is this risk metric and trying to use it to identify these local tops. And the reason why we talk about it is if we take out the risk metric from the color and put it on just a secondary y-axis, so it's the orange curve, you can see that generally speaking, when it gets to this upper regime up here on the risk, in terms of its risk, it means that, okay, you might want to consider taking profits. This is not financial advice. This is just, of course, looking at historical trends in volatility and recognizing that once something has been, oversaturated, in a sense, overbought, taking profits is not necessarily a bad thing. Now, believe me, I'm a huge Tesla bull. I love Tesla. I've invested for a long time in Tesla. So, when I say this, I say it lightly, or I say it, with the attitude that I do think that Tesla will do well, very well, over the macro scale. We made a video about a month and a half ago acknowledging the fact that we were getting up here to this very overloaded regime and saying, you know what, guys, historically speaking, this is not a good place in the short term for us to be. Now, one of the nice things about the risk level is it's dynamic. So if the price of Tesla were to move sideways for 2 years, then the risk would actually drop back down because it's essentially establishing support at a new price level. When the price drops, you can see that the risk drops quicker. And I've often said before that I would never buy Tesla above a 0.8 risk level, especially above a 0.8 risk level, arguably not above 0.75. You could even argue for 0.7. Okay, but arguably, for sure, I would never buy Tesla above a risk level of 0.8. Now, the reason why I do that is because I just recognize that when it gets to this level, it might stay there for a few months, but it likely will come back down. And when it does, then that gives me a chance to take advantage of it. Of course, if you do this, you might miss out on some very short-term gains, but recognizing that, a lot of this is very short-lived anyways, it's better to just sometimes wait for things to cool off a little bit. So we talked about this a month and a half ago that we were, the risk was way up here between 0.9 and 1, and now you can see it's dropped back down. I think it's currently about 0.75 or so. So the general idea is if you wanted to come up with a systematic strategy to trade Tesla, you could do it based off the risk levels. And the risk level for here is my own metric. You can find access to the quantitative version of it at intothecryptoverse.com, so check it out. But it essentially goes from 0 to 1. You could choose to only buy Tesla when the risk is 0.5, meaning you take a very hands-off approach. You only invest in Tesla when you see the risk go down here. We actually would have reached back down there during the dip that we had in March. Okay, so it would have given you a chance for reaccumulation. And then only selling when it's, way up here. You could also buy it at 0.6. You could buy it at 0.7. Of course, it depends on how risky you want to be, how much cash you have that you just want to put into some of these assets. But again, you also should, not financial advice, what I do is I come up with a region that I want to sell at as well, not just buy. Because if you buy forever and you never sell, then it doesn't really, you could argue that you're just trying to grow your investment, so there's nothing wrong with that. But if you're trying to make an investment, see it go up a certain amount, and then cash out, and then use that money for something, you need to sell it at some point. Otherwise, you'll never take advantage of that money. Now, of course, is something to be said about people who just want to leave it in there for 20 or 30 years and don't want to bother with it. There's nothing wrong with that. My point is that these short-term bubbles do exist, and by selling when you get to these bubbles, it can help you accumulate more once the risk level drops back down. There's also, the time value of money. You watch it go up 10x, you take out profits, you put those profits into a more stable asset, maybe an index fund. Maybe you put it into cryptocurrency if you want to be incredibly risky. Or you just put it in cash for a while, wait for the risk to come back down, and then you just put the money back into Tesla if and when the risk comes back down. If it doesn't come back down, then you just kind of have to accept it as well. You know, I was up a certain amount, I wanted to take profits, and it was a good trade. Maybe you didn't time the top exactly, but again, that's why I do it dynamically. I dynamically DCA my sells. So, you know, I sell a certain amount here, but if it continues to go up, then I would just sell more and more on a linear schedule there. So that's what I do. Again, you know, on when we look at the regression curve, here it is on TradingView. We noted before that, you know, there are these bubbles that form at the top of this regression curve. This one has popped a little bit slightly above it, but it doesn't change the fact that we're seeing some of these, you know, these smaller bubbles form, or not smaller bubbles, these larger bubbles form. It kind of looks similar, right? We have a bubble, it retraced back and then had a larger bubble. So we had a bubble, it retraced back, and then we had a larger bubble. Something similar there. From here, I mean, this one was shorter time period between them. If we were to come back down and then go back up, it, you know, it basically would be the same price more or less. So you might see something like that if it were to repeat. But one thing you have to recognize is that, you know, the price of Tesla or the valuation, the regression curves monotonically increase. So just by the fact that if we move sideways at this level long enough, we would get to the regression band. Does not mean that we have to lose a lot of value. You can see that we just chop sideways for a number of years. Okay, if the same thing were to happen and we just chop sideways for a few years, it could just be that, you know, eventually we play catch up, and then this one we meet it and then we move up from there. I know that's not necessarily what people want to hear. If you've been buying it up at this level, you hopefully want to see it continue to go up. I'm not saying it can't do that. My thesis here, right, is that from a risk management standpoint, buying an asset when it's already up, you know, 1,000% in a year and a half generally is very speculative. You know, as I've said before with things like Bitcoin, this is an investment. Buying up here when it's 10x up is more so gambling. And so I just want to caution people at that. It doesn't mean we can't pump back up to $450, $500. It just means that it's a lot more risky to do so, to be investing now than it would have been over here. And by the way, like we were talking about Tesla over here, and saying that this is generally a good accumulation zone. So if you think that, you know, if the thing is, oh well, in hindsight, you know, it makes sense. But you know, we were talking about Tesla at this point and at this point as well. So you have to look at it for you know, for what it is, recognizing that if we're below the fair value line, it's probably a general great accumulation time. If we're above it, and especially up here at the top, it's generally going to be very overheated and a very short-term speculative play. Okay, so I hope you guys enjoyed the content. The risk level has come back down. I think it's around 0.75. So, you know, certainly it's still a very high risk level, but it's a lot better than it was a month and a half ago when it was like 0.95. Okay, it was a lot better. So if you have no intention of you know, selling Tesla anytime soon, you're just looking for a good entry point, recognize that the risk has come back down some. It could still continue to come down a lot. And that's why, again, as I DCA my sells dynamically, I DCA my buys. So if I'm buying Tesla right now, which I'm not, but if I were buying Tesla right now, then I would be putting in a very small amount. And then if it continues to drop, I would actually increase the amount I'm putting in to decrease my cost basis as much as possible. So if you guys like the content, please subscribe to the channel, give the video a thumbs up. We also do have the premium list. You can find a link to that in the description below. And I'll see you guys next time. Bye.